All right, so we're diving deep today into the Postal Savings Bank of China.
Yeah, their 2023 performance.
You've given us like their annual report, press releases, the whole shebang.
Definitely a lot to dig through.
It is, but that's our mission, right? Help everyone understand, what this bank is all about.
How they're doing, where they might be going in the future.
Exactly.
Yeah.
And we're not talking about some small town credit union here. 40,000 branches, 660 million customers.
It's a financial powerhouse, no doubt.
It really is. What I find fascinating is how they evolved, like starting out connected to the Postal Service.
Right, and now they're this major force in China's financial scene. I mean, 12th globally in the Banker's top 1,000 world banks based on Tier 1 capital. That's huge.
So let's try to break down this behemoth. Key segments first: personal banking, corporate banking, and then their treasury operations.
Like a plan.
Tell me about personal banking. Connecting with everyday people, right?
Yeah, your basic transactions, savings accounts, loans, that sort of thing. But they're not just sticking to the basics. They're pushing into some interesting new debit card products, targeted at different groups like young adults, businesses.
So not just a one-size-fits-all approach.
Nope, they're getting specific. You've got the tiger and rabbit themed debit cards, for example, aimed right at younger customers.
Interesting.
They're really trying to get granular, understand the needs of each segment.
Makes sense. Now, corporate banking, that's got to be a whole other beast. We're talking small businesses all the way up to huge corporations.
It is, and their strategy there has shifted. They're moving away from being a follower and more towards proactively seeking out partnerships with companies showing high growth potential.
So less about supporting the old guard and more about betting on the future.
Exactly. And they're getting creative with their financial products and services to make it happen. They've rolled out these specialized platforms like the iCube Intelligent Operation Platform, U-Acceptance for bill acceptance, all designed to streamline things, make it a better experience for the corporate clients.
Definitely sounds like they're embracing tech to make life easier for those clients.
Big time. And by catering to those diverse needs, embracing the technology, they're positioning themselves as a real valuable partner for businesses trying to navigate this rapidly changing economic landscape. Then you've got their third segment, treasury operations.
Right, which is them managing the bank's own money, their investments, correct?
That's the one. They're basically playing the financial markets with their own capital.
What kind of returns are they seeing?
Well, one thing that jumps out from the report is a big increase in interest income from deposits they have with the central bank.
Okay, how big are we talking?
More than doubled compared to last year.
Whoa, the IS a jump. Does that mean they're taking bigger risks?
Not necessarily. They're also working on diversifying their income, putting more emphasis on fee and commission-based services.
So less reliance on that traditional interest income makes them a bit more stable.
You got it. It's all about finding that balance, growth with smart risk management. The report lays out what they call 5 priorities that are driving their strategy: technology finance, green finance, inclusive finance, pension finance, and then digital finance.
That's a lot of priorities. Trying to be on the cutting edge of everything, it seems.
Ambitious, for sure, but they're not naive. They know there are challenges out there: competition, economic uncertainty, keeping that balance sheet healthy.
Sounds like they're walking a tightrope.
Yeah, pushing boundaries, but trying not to lose their footing in the process.
Makes sense. To really grasp their performance, though, we need to look at the financials.
Dig into the nitty-gritty. Income statement, balance sheet, cash flow statement.
All right, income statement first. What story does that tell?
Well, net interest income, the heart of banking, really, that's up.
Good sign.
Shows our core lending activities are healthy and growing. But don't forget about that fee and commission income like we were just talking about. That's playing a bigger role too.
So not putting all their eggs in one basket. Smart. What about their balance sheet? What shape are they in?
Total assets have reached a whopping 15,726,631 million RMB. That's a lot of euros.
It is, and it's a huge increase. What's driving that?
Mostly strategic investments and loan growth. But they're not being reckless. Managing their liabilities responsibly, making sure they've got enough capital to cover what they owe.
So impressive growth, but controlled growth.
Yeah, trying to find that sweet spot. And then the cash flow statement, that shows us the movement of money in and out. They're demonstrating a good ability to generate cash from their actual operations, which is key.
Right, because you need that to reinvest, keep the growth going.
Exactly. So overall picture from the financials is making money, growing assets, and managing that cash flow well.
All good news for the bank itself. But what about the investors? What are they doing to create shareholder value?
Well, they've declared a dividend, 2.61 RMB per 10 shares.
Not bad at all. Any plans for share buybacks?
They didn't mention any specifically this year, but it's something to watch for in the future. Buybacks can be a good sign, shows the company has confidence in its own stock, a way to give back value to those shareholders.
Right, so striking that balance again. Rewarding investors, but also thinking long term.
And that long-term perspective is key to understanding their outlook. They're expecting continued growth in those key segments, riding the wave of China's economic evolution.
But there are always risks, right?
Of course, economic ups and downs, regulatory changes, competition, those are all factors they're keeping a close eye on.
A lot to navigate.
Absolutely. They need to be agile, adapt to changes, stay strategic to keep their edge.
Okay, so we've gotten a good look at their different business segments, their financial health overall. But let's zoom in on those 5 priorities you mentioned before. They sound a bit like, typical business jargon, but I'm guessing they actually tell us a lot about where this bank sees itself in the long run.
Oh, absolutely. They're more than just buzzwords. They're at the core of their strategy. Let's start with technology finance, for example.
Sure.
Sounds simple enough on the surface, but what's it actually mean for them?
Yeah, are they just like throwing money at every tech startup that walks in the door?
Not even close. They've got this whole sophisticated system they call technology flow evaluation. It's how they assess the potential of these tech companies.
Interesting.
Think of it like a filter, helps them separate the true innovators from the wannabes. They're analyzing things like innovation outcomes, how competitive the company is in the market, investment in R&D. It's a data-driven approach for sure.
So they're not just betting on the next shiny object, they're actually doing their research.
Right. They want companies that are truly pushing the envelope, the ones who could change the game.
Okay, that makes sense. Now, green finance. Everyone's talking about ESG these days, sustainable investing. How is the Postal Savings Bank of China fitting that into their plan?
It's front and center for them. They're actively supporting industries and projects that are aligned with, environmental sustainability.
Okay, so like what?
Renewable energy, green buildings, sustainable transportation. Those are the kinds of things they're putting their money behind. Initiatives that have a real positive ecological impact.
So they're actually putting their money where their mouth is when they talk about environmental responsibility.
That's a good way to put it. But it goes deeper than that. They're developing these new innovative financial products specifically to support this whole transition to a more sustainable economy. For instance, they mention in the report the country's first ever carbon emission reduction supporting tool, plus sustainability linkage, plus ECNY loan and just transition loan. Pretty specific, but shows how they're using their financial expertise to make a real difference.
That's fascinating. They're not just hopping on the bandwagon. It sounds like they're trying to be leaders in this green finance space.
Exactly. Pioneers, you could say.
Wow.
Now, their third priority is inclusive finance. This one really highlights how committed they are to social responsibility.
What does inclusive finance even mean in this context?
It's all about making sure everyone has access to financial services, no matter their background, their economic situation. So they're focusing on rural communities, small businesses, individuals who might have trouble getting those traditional banking services.
So they're trying to level the playing field.
Yeah, exactly. And they're doing it in a few ways, leveraging that huge network of branches they have, many in rural areas, but also embracing digital tech to reach those underserved communities.
So like mobile banking apps, online platforms, that kind of thing.
That's right, overcoming those geographical barriers. And it's not just about charity, it's about recognizing the potential in these markets, giving people the chance to improve their economic situation.
Right, empowering people.
Exactly. Then we've got pension finance. With China's population aging, this is only going to become more important.
I imagine so.
They're getting ahead of the curve, developing products and services to help people plan for retirement, make sure they're financially secure down the road, promoting personal pension plans, educating customers on the importance of planning for the long term.
So they're adapting to those demographic shifts.
Precisely. And lastly, digital finance.
That seems like a given in this day and age. Every bank is talking about digital transformation.
True, but they're taking it a step further. They're investing big in AI, big data, blockchain technology, all to create some really innovative financial solutions.
They mentioned PSBC Brain in the report, their AI platform. What's the deal with that?
Oh, PSBC Brain is powerful stuff. They use it to make the operations more efficient, personalize the customer experience, even manage risk. It's like the central nervous system of the bank.
So it's pretty futuristic.
It is. analyzing data, finding patterns, making decisions in real time. And it's not just about AI. They're embracing open banking, working with fintech companies, external partners, creating a more interconnected financial ecosystem. They're even dipping their toes into the digital yuan, China's central bank digital currency.
Wow, they're not holding back on the digital front.
It's bold for sure, but if they can pull it off, it could be a huge win for them.
It all comes down to execution, right?
Exactly. Ideas are great, but you got to be able to make them a reality.
Okay, so they've got a lot going on, investing in new tech, expanding their reach, trying to be a leader in sustainability and social responsibility. But it's a tough market out there, lots of competition.
No doubt. The Chinese banking sector is full of players all vying for the top spot.
So what makes the Postal Savings Bank of China stand out? What's their unique advantage?
Well, for one, their history is pretty unique. Coming from the postal system, they've got a different perspective, a different way of thinking about serving customers. And they've got this laser focus on serving the underserved, both in those rural communities and specific groups like young adults and small businesses.
They're not just about making a profit, they're trying to have a positive impact.
That's a big part of who they are. They see themselves as more than just a bank, but as a partner in their customers' success, in the success of the Chinese economy overall.
That's a powerful message.
It is, and they're backing it up with action, with investment, with initiatives that are truly making a difference.
Okay, so we've covered a lot. Their business segments, their financial performance, those 5 priorities, their commitment to social responsibility. But what about the people behind all of this?
That's a huge part of it, especially for an institution of this size with so many customers, so many employees.
And their annual report actually dedicates a whole section to, capability building and talent development.
They get it. Their people are their most valuable asset.
And it sounds like they're not just saying that, they're putting real effort into training programs, leadership development, fostering a positive work environment.
They're walking the walk. They've got all sorts of programs to support their employees, like the PSBC Voice event, for example. That's where they get feedback and ideas from employees at every level. It's all about open communication, making sure employees feel heard and valued.
That's a smart move.
Yeah.
Happy employees are productive employees, right?
Right. But it's more than just keeping people happy. It's about making sure they have the skills, the expertise to thrive in this industry that's changing so rapidly.
They have this 358 refinement, competitiveness enhancement program. Can you explain what that is?
It's a program designed to provide training for employees at different points in their careers. 3 stands for the 3 levels of training: basic, intermediate, and advanced. The 5 refers to 5 key areas they focus on: customer service, risk management, product knowledge, digital skills, and leadership skills. And then the 8 represents 8 specific competency models that they use to evaluate and develop employee skills.
It's pretty comprehensive.
It is. They're investing in their people, no doubt about it.
And it's not just about training, it's about creating a workplace that's diverse and inclusive.
Definitely. The report highlights their efforts to promote gender equality, to create a welcoming environment for everyone. They've set targets for female representation in leadership positions, and they're really trying to recruit and retain talent from all different backgrounds.
It's great to see a financial institution prioritizing these values.
Yeah, it's the right thing to do, and it's good for business, too. They're leading by example.
And that commitment to social responsibility goes beyond their own employees. They're involved in all sorts of community initiatives as well.
They are supporting education, poverty alleviation, environmental protection, all sorts of things. One initiative that really stands out is their work with the PSBC Foundation.
What does that foundation do?
It focuses on providing educational opportunities for students from underprivileged backgrounds. They fund scholarships, build schools, provide educational resources to communities that need them.
That's fantastic.
It shows they're really committed to having a positive impact on society.
So the Postal Savings Bank of China is taking a very holistic approach to success, it seems, focusing on their financial performance, on innovation, on developing their talent, and on social responsibility. It's a lot to juggle.
It is. They're not just trying to be the biggest bank, they're trying to be the best bank. The best for their employees, the best for their customers, the best for China.
Well, you've definitely convinced me. They're a much more complex and nuanced organization than I initially realized.
They are. They're a fascinating example of how a traditional institution can adapt and thrive in a world that's constantly changing.
So as we start to wrap up this deep dive, what's the key takeaway you want to leave our listener with today?
The Postal Savings Bank of China is a force to be reckoned with in the global financial landscape. They have a clear vision, a commitment to excellence, and a deep understanding of the evolving needs of their customers and stakeholders.
And they're embracing innovation, pushing the boundaries of what's possible in the world of banking.
Keep an eye on them. They're shaping the future of finance, one transaction, one investment, one community initiative at a time.
Well said. It does sound like they've got a lot of different things going on. We've talked a lot about the more, qualitative side of their business, but what about the numbers? What are some of the key financial highlights that jumped out at you from the report?
Well, we already touched on it, but their total assets hitting over 15 trillion RMB, that's a massive number, and a big jump from last year.
Yeah, it's hard to even wrap your head around a number that big. What's fueling that kind of growth?
A couple of things, really. They've had strong growth in their loan portfolio, especially on the corporate banking side. That focus on partnering with those high-growth companies seems to be paying off.
So their lending activities
Yeah.
are a big driver of that asset growth. What about profitability? Are they actually making money?
Oh, yeah, they're making money. Net interest income, that's basically the profit they make from lending, is up. Plus, they're seeing good growth in fee and commission income, too, which shows that diversifying revenue streams is working.
Okay, so the top line is growing, but what about expenses? Are they managing to keep those under control?
That's always the key, right? And the good news is their cost-to-income ratio, which basically measures how efficiently they're operating, has actually improved a bit.
Okay, so they're getting more efficient. That's good to see. Now, for a bank, capital is king. What does their capital position look like?
Very strong, actually. Their capital adequacy ratio, that's a key measure of a bank's financial health, is well above what regulators require. So they've got a nice cushion to absorb any unexpected losses.
That's reassuring. So financially, it seems like they're in a good place. What about their plans to, give back to the shareholders? We talked about the dividend earlier, but anything else we should be aware of?
Well, that dividend is nothing to sneeze at. It's a solid payout for investors. As for share buybacks, there weren't any announced this year. But that doesn't mean they won't consider it down the road, especially if they feel like their shares are undervalued.
So for investors who are looking for a steady dividend and the potential for growth, the Postal Savings Bank of China might be worth a look.
It's definitely something to consider. Of course, investors always need to do their own homework, weigh the risks and opportunities before making any decisions.
Couldn't agree more. All right, so as we wrap up this deep dive into the Postal Savings Bank of China, what's your overall assessment? Can they keep up this momentum?
That's the big question, isn't it? They've got their work cut out for them, lots of competition out there, the economy is always a bit uncertain, and regulations are constantly changing.
It's a lot of potential headwinds.
Definitely. But they've also got a lot going for them: solid financial position, a clear strategy, a talented workforce, and that genuine commitment to serving their customers and their community.
So it's a mixed bag, really.
Yeah, there are both risks and opportunities on the horizon. But one thing's for sure, the Postal Savings Bank of China is a company to watch. They're not just your average bank, they're innovating, they're shaking things up. They're a real force for positive change in China's financial world.
And that's a great note to end on. It's been a fascinating look at the Postal Savings Bank of China.
I agree. Definitely a company worth keeping an eye on.
Thanks for joining us for this deep dive. Until next time, keep exploring, keep learning, and keep challenging the status quo.